So we're in the last full trading week of October. We have lots of earnings announcements of big tech companies, Microsoft, Apple, Amazon, and more. So I want to get my bearing here on Skinny Dip Monday, if you will, on the SPY, okay, the S&P 500 ETF, and use the broad market overall direction and where I think it's headed to keep in mind what individual stocks might do. So before we dig into this chart, a more important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. All right, so on this chart of the SPY, every candlestick is representing 1 month of price action. So naturally, the current candle that we're in is only partly finished, right? It may not end up as this little green guy here. But so far, we can see that the month of October has bounced off of the 50% retracement, 349.12 of this whole pandemic advance that basically was a 2-year bull run higher. So that's a very important long-term support level, and it adds evidence to why the bounce off of that low has been sustained. Now, I'm going to go from this monthly chart and just ratchet it down to a weekly. Okay, I'm not going to even switch to a different chart. So in order to get the data, I'm just going to scooch back here and see how does this look on the weekly chart. Now, you can rehook the retracement tool if you want, but that's not as important as zoning in on what the current action is. So again, just focusing here on one concept, one tool, and showing you how I use it. If you want to learn more about it, you can dig into my GAN book, GAN trainings. But here, taking that same 50% retracement, which is just basically a Fibonacci tool with everything gone except for 50%, you can see that up ahead is 389.92. So with the current move higher, that might provide a good resistance. On the journey towards 389.92, keep in mind that right now, the RSI power zones, so my favorite momentum indicator, are showing that we're in a recovery mode, but this is not a particularly strong bullish setup because the disconnect between price and momentum is not happening in the bull support power zone. It happened from underneath there, which is what I call no man's land. And that is a clue that this recovery, while currently showing some legs, may not have that much more time to it. So I'm going to now take this down and go to the daily time frame. Again, just changing the candlesticks from weekly to daily. That's it. And again, I can nudge the Fibonacci retracement back into place if I want, but it's not required for me to do my analysis. So with the current recovery in motion, especially today's move above the high from October 5th, you might look at that and say, oh my God, we got to get above the October 5th high. I need to buy, I need to buy, I need to buy. Hold up a second, okay? Because that would be what's called breakout trading. And breakout trading, guys, it can work, but it depends on the scenario you're in. And you have to consider your risk to reward, whatever that is for your account size and your style of trading before you take action. So if you were to go in and buy just because we broke above here, well, you have to do that with the context of what's your next upside target. And remember, on the weekly chart, I already pointed out the importance of 389.92. I'm not saying that that's as far as we go and that's it, but it's a pretty important resistance level. Now that we're on the daily chart, if I combine that with a nearby actual traded level, okay, so now we're combining a projected resistance with an actual traded level. And that's really when you can hone into more powerful zones. Well, now it looks even more likely that the market might have a significant barrier to the upside at this 389.92 because the low at 388.42 might get in its way. So coming back to the daily time frame and what's going on here, let's zoom in a little bit. So I'm just staying in the same time frame and I'm just kind of looking more closely at the data. When you look at the momentum down here, when I look at this, I can see that the current action is coming right back towards a recent overbought reading. And that one was close to this right here. Right? So if you went for this action above this October 5th high as a breakout trade, you're doing so on the short-term momentum sort of being extended. So I much rather buy on weakness the market gives me after breaking higher as opposed to acting on the break itself. Okay, it's just a safer bet. All right, hope that helps. Catch you on the inside. You can sign up at the link to get my hot, timely, actionable updates as soon as I publish right to your inbox.